Hello, welcome to the European Open briefing for Tuesday, October 24th, 2017. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we're seeing the dollar still coming under pressure on those concerns about Donald Trump's policies. The dollar hit an 8-week low against the yen. Although it has since recovered. Yesterday, Donald Trump, the new US president, signed an executive order withdrawing the United States from the Trans-Pacific Partnership Agreement. So that's raised a lot of anxiety in the markets on the future path of US trade policy. We also had some comments from the Treasury Secretary nominee, Steven Mnuchin. He made some remarks against a stronger dollar. As I mentioned, the dollar has recovered a little bit. We're seeing slightly improved risk sentiment as we head into the European Open. The pound is not doing too badly ahead of the UK Supreme Court's decision on whether or not the government can trigger Article 50 without Parliament's consent. And other currencies performing well this morning are the Australian and New Zealand dollars, both of which hit 10-week highs earlier today. So let's start with the dollar-yen pair. We can see here the dollar briefly fell below the 113 level. It hit an 8-week low of 112.52 yen. It's since rebounded above that key level. So, as we already mentioned, the US has formally withdrawn from the Trans-Pacific Partnership Trade Agreement and also wants to renegotiate the North American Free Trade Agreement with Canada and Mexico. There are concerns that if the US withdraws from TPP, it would allow greater influence for China in Asia. That was one of the main reasons why certain Asian countries, along with the United States, wanted the TPP agreement in order to minimize China's influence in the region. But Trump's main concern is that such trade agreements negatively influence the US in terms of US companies have an uncompetitive edge. And also there's fears of a border tax. Donald Trump has once again raised the prospect of imposing border tax on US companies that manufacture elsewhere and import the products into the US. And even though the Trump has reiterated pro-growth policies such as tax to corporation tax and increased infrastructure spending, they're mainly being outweighed by those concerns of the protectionist policies. Moving on to the dollar index, which is a measure of the US currency against a basket of its major trading partners. The dollar index fell below the 100 level for the first time since December 8. So we can see that the dollar does seem to be continuing to lose momentum. We had some comments from the new U.S. Treasury Secretary, Steven Mnuchin. He said, basically from his confirmation hearing in the Senate, which has certain details which have just been made public. He apparently said that from time to time an excessively strong dollar may have negative short-term implications on the economy, and that's in contrast to earlier remarks he had made before, where he had indicated that he would be in favor of stronger dollar. So if it is becoming more and more clear that the Trump administration overall does seem to favor a weaker dollar, and again that could hurt the dollar's advance in the future. And there's still uncertainty on whether or not the new Trump administration will brand China as a currency manipulator. Mnuchin hasn't really said anything much about that either, so we're still waiting to hear on that, because if the US does brand China as a currency manipulator, it could very likely raise tensions between the two countries. If you look at the UK pound now, we can see the pound hit a more than 5-week high, 1.2544 earlier this morning. It's since retreated to below the 1.25 level, currently around 1.2480. We're soon gonna have the Supreme Court's decision on whether they will overturn the High Court's ruling that said the government needs to have parliamentary consent before triggering Article 50. As we know, the UK government appealed that decision, and that's why the Supreme Court, that's why the decision went to the Supreme Court to have a look at, and it's most likely that the Supreme Court will rule against the government and will confirm the fact that Parliament will need to vote on whether or not the government can trigger Article 50. And this is positive for the pound because markets see such a move would allow greater parliamentary involvement in the entire Brexit process, and that would deter the government from settling for a hard Brexit, as MPs will likely push the government for as much close access to the EU as possible. If we have a look at the Australian and New Zealand dollars now, both currencies climbed to 10-week highs earlier today. They've since eased back a little bit. The Aussie broke about the key 0.76 level. We saw the Kiwi spike up to 0.7264. It's an important week for both currencies. Tomorrow we have Australian CPI data for the fourth quarter of 2016, and New Zealand's CPI data will follow on Thursday, both of which could be key to whether or not we will get further rate cuts in both countries in the near future. Although it's worth mentioning that the Australian dollar remains vulnerable to what's happening with Trump's stance on China. As we know, Australian trade is very much dependent on Chinese demand, so that could have negative impact indirectly on the Aussie. Plus, of course, we're seeing volatile iron ore prices. So, and it's also worth saying that the Aussie has been not as strong against other currencies. So that the recent gains seem to be mainly on the back of the weaker US dollar. Before we go, let's have a quick look at today's economic calendar. We can see we had Japanese manufacturing PMI data. The Japanese manufacturing PMI rose to a near three-year high of 52.8 in January, pointing to a strong start to the new year in terms of as far as Japanese manufacturers are concerned. And we also just had a Eurozone PMIs. We can from France and Germany. The French services PMI was rather strong, although German services PMI came in below expectations. We're soon going to have the Euro-wide PMI figures. It's going to be a quieter US session. We only have the market manufacturing flash PMI. That's not as important as the ISM manufacturing PMI. And then later we've got existing home sales out of the US as well. But that's pretty much it. It's going to be a fairly quiet day in terms of economic data. That's it from me. Thank you very much for watching and have a great day.